Hi and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video, I'm going to do something a little bit different. So last Monday we did pound US dollar, the trend is your friend. This week we're going to do trend continuation patterns and we're going to use pound again. And the reason we're doing this is just to kind of show you the key things to be watching for when you find that trend. So I believe as a trader, one of your jobs is to find that trend because it's easier to make money in trending environments. So what I like to do is find that daily to 4 hour trend, and there's a couple of different examples, and I'm going to use the recent example that we've looked at for pound. We're going to dive into that in a little bit of detail. Then I'm going to go back over some older examples on different time frames. So if you want to look for simple trading opportunities, what I like to look for is this daily time frame, and I like to look at in particular the trend on this time frame. So the first example we're going to go through is a buying opportunity and what we should look for in order to continue to trade that trend. So the first step is we look for trend, which appears here with this higher high. Once the market has created that higher high in the daily time frame, gives me an opportunity to identify an area of support and an opportunity to potentially buy the market if we see the right conditions on our lower time frame. So the next step is, once I see that higher high, is looking for price to pull back to an area of support. So I've marked out 122.50. It's the open and closes. I like to use the bodies of the candles as a kind of main area of support or resistance, but I also do zones as well with the tips of the wicks, especially on those lower time frames, but we'll go through that in a little bit of detail later. But right now, the first step is look for that daily buying opportunity, those daily time frame opportunities. And what I want to do is look for my daily candles to be in a trend or an uptrend. And then what I'm going to do is place that support and resistance and then wait for an entry. So what I do is set an alert at that key level. Once the market hits that key level, my next step is to dive into the lower time frame and look for an entry. Now, one way you can do this is looking at those hourly charts. So what I like to look for is something called trend confirmation patterns, okay, or trend or changes in cyclicity. You may hear me say things like changes in cyclicity a lot, and what I mean by that is basically when the market trends, we have phases. We have impulse phases and we have retracement phases, okay, so where the market is essentially pushing to the upside in a trend, slight retracement of that, a slight pullback, you may have heard it called as well, and then another impulse move. And what we're expecting is the market to continue to do things like this, okay. So within that you get smaller time frame trends. So if this is the daily time frame, okay, if I just change the color of this and we go for a 1 hour, okay, so the 1 hour within this would be something like this, okay. You get a mini trend to the upside, and what we can do is trade these impulses on that lower time frame, okay. So what I look for is the daily to retrace back to an area of support, okay. So let's just say we look left, this is our support area, we're looking to buy from this area here. So what we would see on the hourly is a pullback, and what I'm looking for is a trend continuation pattern or a change in cycle pattern, and that to me is any kind of double bottom, okay, for an uptrend. So we look at double bottoms, we look at inverse head and shoulders patterns, okay, and we look at just normal changes in the trend where we get a higher low and a higher high, okay. So for this instance here on pound, price is in that pullback move because we're getting lower lows and lower highs, okay. Market pulls back in, it pulls back up again. Now nothing's changed, we've hit our level, nothing has changed yet. What I need to see is the market form a higher high. So what we get is another little bit of a pullback, a continuation move. So a lot of traders may think that price is continuing to push to the downside here. We then get a full reversal, and then the market forms a higher high with this candlestick close in here. Now there's two ways you can trade that. You can either buy that candlestick, place your stop losses below the swing low, or wait for a pullback. So you could mark out a little bit of an area, which would be these lows down, these highs down in here, which would be your support zone, looking to be bought up. Now we don't quite make it, okay. The market then kind of moves around a little bit, doesn't go perfectly as we expect it to, but we do get a little bit of an inverse head and shoulders pattern forming at that point. Okay, so what we can do there is look to buy the dip essentially, because we've got our trend confirmation bias. We're looking for buys because the daily time frame is bullish. Okay, so we need the 1 hour to then become bullish as well, and the only way it does that is to become in an uptrend by forming a higher high, okay, which happens there. So what we can do is look to buy the market after that point, which would work out really, really well. Now, last week we looked at selling pound, and we looked at selling pound for the exact same reasons, but we were looking at the daily downtrend. Okay, it was one of the only markets that was looking to form a bit of trend going into last week. Okay, and you can see here the reason why we were looking for that short was because the market came down, formed a lower high, and we were looking for resistance at this level. It found resistance, it started pushing to the downside. So what you could look for here is one of our trend continuation patterns. Okay, when the price pulls back into that zone, you're looking for the trend continuation patterns. I like to dive into like an hourly time frame, because an hourly is a good scope of what's going on in, when you're looking at your daily time frame. Also, I like to look at the 4 hour 15-minute ratio, which we'll go through in a second. But look, the market comes back, it's trending to the upside. It's trending to the upside because it's in that daily retracement phase. Okay, so the daily would be looking at just one straight line to the upside. The market then breaks down and forms a double top pattern in here. Okay, double top, retest that high, we have a neckline through there. The market breaks that neckline. That's a good idea to look for a short. Stop losses above the high, look for the market to play out to the downside. Okay, really good opportunity through there. If we look at it from a 4 hour point of view, so I like to say the 4 hours are really good midterm. So I really like to look at the daily close, which is bearish. Okay, the 4 hour trend, okay, for my support and resistance, and then I like to enter on a 15-minute time frame on a change in cycle or a trend continuation pattern. Okay, so we can see here on the 4 hour time frame, I believe we actually pointed this out in one of the videos as well, was the fact that we were looking to get short around here because the market is finding some support and resistance. And we can even look at today, the market came back, retested the wick lows just through there. Okay, so we'll have a little look at those as well. But essentially 4 hours trending to the downside. What I would be looking at is zones again, so I'd be looking at the opens and closes down to the wicks. Okay, market again opens and closes down to the wicks, and I'll be looking for price to enter that zone to then look for a trend continuation pattern. If I dive down into a 15-minute time frame, we can see those patterns come into fruition when price gets into that zone. So what we're looking for with the first one is the market's pull back, it's moving in a bit of an uptrend, we get another move up, break. The market breaks to the downside here. You could look to short there, place your stop loss above the highs, wait for the market to play out, or obviously wait for a pullback, wait for a trend continuation candlestick. Okay, next step is the market's impulse to the downside, we wait again, the market is trending back to the upside, boom, double top, fake out at the top there, we break the candlestick low with this candlestick here, market is now breaking to the downside. Okay, so really simple patterns at really key structure points. Okay, so what we're looking for is those either the daily to the 1 hour areas, or you're looking at your 4 hour combined with your 15-minute change in cycle. Okay, hope you enjoyed this video update. I hope you learned a lot. If you did, please give it a thumbs up, and I'll catch you in the next video.